Hey, BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it just gone 1100 UTC. Awesome to see you all. So many people waiting on the live stream today. Brilliant to see some old faces and also some new. How are we all doing, guys? Hans, I see you in there early doors again. Great to see you. Nick, brilliant to see you in here as well. GOT, how you doing, my friend? Erica, lovely Erica, always here on the streams. Absolutely bossing it. How are we doing, everyone? Is it Robocop or Terminator? Don't forget about the beeps as well, which I've still never gotten to the bottom of what that was. Absolutely driving me mental. Absolutely mental. I listened back to it on the thing and I could not hear it live, genuinely. I still don't know what it is. And all the people in the tech department at work keep taking the piss out of me as well, because I'm obviously a little bit older than the average person in this industry. So, Hans, let's see if his teeth chat. Yeah, I tell you this right now. It is not as warm as it was in Jamaica, right? But we're not going to go on about Jamrock. I just recommend, people, if you get the opportunity to go there, go there. But if what I would say is get yourself out, meet the real people there. They're amazing, absolutely amazing. Awesome. So, how are we doing, guys? How are we doing? So, I know a lot of you guys were whack as well, my man. How you doing? I know a lot of people were present for Monday's session as well when we kind of looked at premium discounts. So, I wanted to kind of open this session up and say, how are we doing with that? Was it helpful? Did you help process it? Did it just completely just get you utterly lost? Because today I really want to kind of listen to what you guys are saying. So I just had a mentoring session with one of my private clients, and he's just such a top guy and a really good trader. But he was like 20R up a couple of weeks ago, smashing funding challenges, everything. But we just had a really big session about how it's really easy sometimes to just lose focus on the higher time frame and then look to execute on the lower time frame. You end up getting caught chasing things, and it's really easy to end up in big periods of drawdown. Hans, thank you, mate. Yeah, do you know what? Brilliant company came in and in 24 hours booked, done, ripped out the old boiler, put the new one in. We've got, not a massive place at all. We've really, it's a fair size, but we've got a really big loft space above us. So you need to do a lot of stuff with the boiler flue, which was quite complicated. They came in, people that did it were absolutely awesome, and they smashed it. And to be honest, it has been so nice. Oh, good Lord, it's just been so nice having a hot shower. Hey, Moral, how you doing, brother? Good to see you. And Nick, really glad you liked the session Monday. Awesome. Hans, okay, that is brilliant. Not brilliant, I don't mean it like that, mate, but at the moment having issues getting a nice entry. Right, so entries. What are we thinking? I think that looks like a really good opportunity here. So I want to focus on two things today then, right? Because I think this is really going to help, which is our daily bias and whether it's clear or not. And if it's not, then we're going to refer to our session liquidity. Yeah? I like the idea of having a strict regime. Oh, nice. Yeah, I mean, to be honest, best trading times of my life, or best sporting periods of my life, or any really, when I was in the music industry, stuff like that, I found that I had really sickeningly good habits, right? There's a book out there, I think it's like I'll have to find it, but it's all about building good habits. And the premise behind it, which I completely believe in, is that we either train ourselves into good habits or bad habits. Bad habit for me is alcohol, right? I'm always very honest about it. So what I have to do now is in the week, I allow myself to have these little slip evenings, like last night, for example. And this sounds so childish, but there's this new show out on Netflix called The Fall of the House of Usher, which is from a production team that did, by the way, if this is boring the piss out of you, just tell me to shut up in the chat. Just quickly, House of Usher, with Fall of the House of Usher, which comes from the people that did The Haunting of Hill House, The Haunting of Bly Manor, and also Midnight Mass. If you're going to watch any seasons, they are horror-based, but it's not all about the horror. The storylines are immense. They use the same acting groups, and it just blew me away. But it's really weird to say this about what is obviously a really freaky horror show. Really freaky, like a little bit freaky, but it's all about the story. But it really connects with me. And I find when I get that, I tend to reach for like a big glass of scotch or something like that. So last night, kind of sat there, had a nice glass of scotch, but balance it out by saying to myself, look, I don't allow myself to drink. I have to not drink at least four days a week, right? If I stay away from the alcohol, I'm good as gold. Once I've had a drink, I can then tend to take it a little bit too far. So that's something that I want to improve in myself, not to any kind of alcoholic levels by any means. I can go several weeks without taking a drink, right? But I don't want it to become a bad habit. So the reason I'm mentioning that is because, like Whack here says, like the idea of having a strict regime, yeah? Bias, brilliant, trying to get your head around that. I need to have a glass of wine just to relax after a day's work. Mate, I'm with you. I'm with you 100%. And actually, a commercial dive doctor who I used to work with, I was hugely into my scuba diving in my early years. And the commercial dive doctor that I used to work with, who was assigned to the UK Special Forces as well, was unbelievably knowledgeable guy. And two things I'd always take away from him that he said to me was, one, never put anything bigger than your elbow in your ear, right? Meaning don't go and stick cotton buds right in your ear because you'll screw your eardrums, right? That's random. But the other one was, he said he has a glass of red wine almost every night. And he said, from a medical standpoint, there's nothing wrong with that. Yeah. So the key thing is stopping at that little junction, right? I can't do school. That's the best way to be, Nick. I try and do that in the weeks, and then I try and make sure I don't go too big at the weekends. Just a cheeky whiskey, but that's speaking my language. That is, Gio. That really is. So anyway, nice little bit of ramble. I normally just piss on for about 5-10 minutes at the beginning of the stream. So I think people in future, when they watch these back, if they do, will probably just fast forward the first 10 minutes of every stream. So, Nick, you got a really good point here. So, okay, love that. Daily bias. What happens when it's clear? What happens when it's not clear? Yeah. And then, Nick, are you able to go into more details on session trading over Asia, London, New York, AM, PM, mate, and how it works with crypto and other markets? If you can, absolutely. So let's bring in, that's going to cover our sessions as well. And then we want to look at our kill zones, right? So I just want to go through something with you very quickly, right? So obviously traditional markets for me, which is I saw your wine fridge on. Yeah, you got to have a good stock on you, although you don't always help yourself when you keep such good stocks like that. So when Wax mentioned a point here, hunting previous session liquidity is perfect for me, especially being in Asia. Yeah, I've set times of the day when I look at the charts and plan. Absolutely, because for me, Asia's a huge session that I want to use as a proxy for what price is doing. Yeah. So let me just show you this really quickly, actually. So it had really good trading on Euro USD this week because it's just been so clean. By the way, you see these boxes? Yeah. This is just from a session indicator. And all it's doing is, you see my sessions here, it's just overlaying these. Here we go. Let me just clear some of this up. They've moved the bloody object tree. Really sorry, I know I'm moan about these things just totally randomly, but I really don't understand why they do that. Right, so let's hide all of this, right? Get ourselves a nice clean chart. The other thing that I've got on here is my session indicator, which is this that depicts London, New York. Yeah, this is for equities, by the way. When we're on Euro USD, we're pulling this back to midday. So just let me adjust that very quickly so that we're all on board. Oh, wrong one. Yeah, so see, this is 8:30. So I don't use this as AM, lunch, and PM. I use it as London, New York AM, and then PM, right? Just so that I get my three very defined sets. But when we're trading currencies and we're not trading equities, then we need to move this to 7 o'clock, right? Because the market starts earlier. And you'll see it just depicts that here, which is midday my time, right? So you can do that with the session indicator, or you can just look at that. But one thing I really wanted to cover with you here were these two beautiful buy days and sell days, right? Which we can frame with Asia. I had this other one here from this guy that builds these indicators for. Well, he doesn't build them for me. He's built these amazing indicators, and I was lucky enough to be connected with him in the early stages. So that's the one that has these at the bottom here, this up here. So forgive me because this is going to kind of mess the things up a little bit, but I just want to show you. The Asia range here. Perfect. So just going to pop this on. Forget about the standard deviations, right? with WAC talking about Asia's range, I just want to cover this really quickly before we really go deep into this. Hans, I wish my trading was as good as my wine skills as well. I think we'd both be very rich, mate. So let's look at what we're seeing here. This is why Asia is really important for me, the accumulation in Asia. Yeah. So this box just represents our Asia session. Yeah. Now, you can build an entire strategy around the idea that you run Asia's high, you break down, you chase down Asia's low. Yeah. Look how effective this has been, by the way, on Euro USD recently. Swept Asia's high, broke down. Swept Asia's low, sold up. Swept Asia's low, sold up. Swept Asia's low, sold up. Swept Asia's high, broke down. Sorry, WAC, I know this probably looks like I'm taking the piss, mate, to be honest, because I know a lot of your trading has to take place within Asia, but Asia's range is in here, stops here, what happens? Sweep the low, get a little fake out move, but second move allows us to get in, yeah. And then here, I think we get a little bit choppier if we were to look at this as the range from midnight. Just kind of here, so until 5. Yeah, so we can see if we extrapolate that along. We ran the high here. However, we didn't get a breakdown, and see how it almost uses it as support? Yeah. So this is what I'm talking about when I'm talking about session liquidity. All right. So let me turn these off for a moment. And basically the daily profile here is what I use for that. And then these other ones here are baked into this indicator, which is Asian session range, which is ironic really because I've programmed the 3 boxes to show everything other than Asia's range. But what I do look to do, and what can keep it really clean, is if you just put a vertical line at the beginning of London, like that, yeah? And actually that's probably the only poor example on the page, isn't it? So let's do this instead, yeah? Then what I'm looking for there is the low before that session. When that gets run, yeah, that's when I'm looking for continuation, all right? So that's what I mean when I'm talking about session liquidity, right? So what forms of liquidity do we have? We have prior day's high, prior day's low, yeah? High of day, low of day. And then we have our session liquidity, yeah? Meaning that this is our London session, yeah? This is our New York AM session, and this is our PM session, yeah? These are all available as kill zones, as introduced and taught by ICT. Again, as I do every stream, I recommend going to the core content if you have the opportunity and really kind of reading through that. The way that I decant this and the way that I teach it might not be exactly in line with him and his methodologies, right? I mean, I'm pretty sure that it is, but I've studied under a lot of other people as well. And the main crux of that comes, as I've always said, from ICT and from SC, who have been huge influences in my life. But both follow slightly different paths, right? Which is why it's important to equip yourself with things that really, really speak to you. So without waffling on too much, what we're looking at here is our session liquidity, right? So we're going to come back to that in a little while, because what you want to be thinking of always, yeah, is price is either reaching for liquidity above an old high or below an old low, or it's looking to rebalance an inefficiency, which is a fair value gap. The other thing that you want to then be considering, which I'm not sure we'll really run into today, but I think we will look upon, are our market maker sell models and our market maker buy models, meaning that we're looking for, and this is a great example here, yeah, so we're looking for liquidity to be run, which we get here. Then we're looking for a breakdown. That's our reversal. Yeah, this is our first distribution. Yeah, and then you can either have a redistribution or you get another reversal. Yeah, 3-stage program, 1, 2, 3. And then in here, we're looking for another reversal, right? Again, doesn't happen. We go quiet through the night. Asia runs quiet. What do? Run Asia's low here. Yeah. So if we're looking at the low before here, which is here, we see that this run is lower. And let me zoom in for you a little bit, actually. Sorry, guys. Yeah. So the Asia low before 7 o'clock, yeah, is that low there. Price runs that. We get our expansion, retest, price goes away. But if we're following our principles again, what are we looking for, right? We're looking for our reversal. We're looking for accumulation. And then we're looking for our reversal again. Yeah? And then price ultimately sells off, right? Now, these things can be hard, and I know they can be a little bit subjective as well. People are like, yeah, but you could freaking draw them anyway. Like you say, reversal here, yeah, and then you would say distribution, yeah, and then redistribution, reversal, right? But the premise is the same, and it's a really, really good way when we're looking if we're going to set up PO3. Yeah, exactly. So AMD, yeah. So AMD, especially with the Asia sessions, are accumulation, manipulation, and distribution. Yeah, and the power of three that Hans is going into there, yeah, is, and we can actually take a little bit of a look at that. But basically, what you're looking for there is your accumulation, your manipulation, and then your distribution. Yeah. So if we were looking at that here, our accumulation here was the Asia session, yeah, which came to here. Let me just turn these sessions off just for a second, just so it keeps it a bit cleaner for you guys. Yeah, so we have our point of accumulation here. Let me just draw that in so that's accurate. Then we have our manipulation. Yeah, that's the market getting sent in the wrong direction by smart money. And then we have our expansion. Yeah, accumulation, manipulation, distribution. Yeah, power of three. Wait for an accumulation, wait for the sell stops to be engaged here, buy program to kick in, return to this, which on a lower time frame would be a fair value gap or some kind of PD array, and then we look to trade it up to clear and obvious. It's so scary how often price targets equal highs or lows. Yeah, think of it almost like a little Easter egg that the price leaves behind, the algorithm leaves behind, yeah, to attack later on. So equal highs, price goes into there. Obviously, you're always then aware of your internal liquidity targets, which are these, yeah. And a good way to kind of monitor what price is doing is you can look for these consolidations, yeah, or you can look for these. So let's say, for example, this, which is a really good one. So price was looking to obviously to rebalance this. It didn't, broke through it, yeah. You look at something like that, and you're saying, okay, you can see here how price then gets above it. So it's stopping respecting the things on the sell side of the curve, and it's starting to engage the buy side of the curve. All right. So before I get this too complicated, Dave Digital, hopefully in a good way, mate, or just maybe just appreciating the colours. So what I want to do is, right, I just want to really break this down to its absolute most simple. So I've had a bit of a waffle for like 15, 20 minutes now, talking about the ideas, principles, power of three, all that stuff. How do we put it all together? So, and then we're also going to look, oh, that's really interesting, GOT. Let me have a chat with our technical guys about that. I really do not know. No, same streaming software, my friend. It's only coming out at 720. Let me speak to the guys about that. Stream only at 720p. Yeah, well done, mate. I'll get that fixed for next week. So let's just get ourselves. It was the same on Monday too. Okay, so since they've screwed me over since I've come back, right? Someone's stolen some. Some quality from me. That we'll get them back. Don't you worry. So here we are on daily. I'll just, guys. By the way, if this isn't clean, if the res is a bit terrible, let me know. I'll just zoom in a bit more. Yeah. So should we just deal with what's on the screen here? And if you want, you can pick a completely different asset if you want, just to prove that I'm not cherry picking this. Or if you're happy with this, we'll just continue on with Euro USD and then we'll do an overlay onto crypto as well. Yeah. So remember what we said. Yeah. Let's just take what's on the screen very, very, very quickly. Yeah. Let's put that into there. Right. We don't want to go too crazy. Just let me draw these in quickly for you. Yeah. Again, fair value gaps for me on the page are grey, right? But I'm going to do these. Need better res to read the screens. Yeah, sorry about that, Try Cryptos. I don't know why it's down today. Normally it's putting out in 1080p. Yeah, I I don't think that I have the technical know-how to change this. Let me just have a very quick look here. Right, 1 second, guys. Let me see. Let me see if it makes any difference. Okay, yeah, for some reason they're capping the high definition at 720p. Okay, let me have a chat with that. Hopefully, if I zoom in a little bit more, it will be yeah, okay, as long as it's zoomed in. So all we're going to do here, guys, right, we're following our principle that price is looking to do one of two things. It's looking to reach for liquidity above old highs or below old lows, yeah? And or it's looking to rebalance a fair value gap. And what we're going to do is we are going to respect, if we're bearish, we're favouring shorts. If we're bullish, we're obviously favouring longs. So if we're in a sell program, we expect the up close candles like these, to reject price, right? When we see them violated or fair value gaps violated, that's when we then change our bias and we start to look in the other direction, all right? So let me just slip these in here. Make sure that I'm not missing anything particularly clear and obvious. Okay, then the other thing that I'm going to put on here is to show what we're doing in terms of where price is moving to, yeah? We'll just do these in red as well. We'll do them a bit thicker so they stand out, yeah? Right, so all I'm doing here, guys, is I'm just marking up the highs and lows and showing what our expectation is of price. Right, so does that make sense to everyone? Yeah, we would also have had this as an internal target as well. So what I want to focus on here is when price is in a bearish state of delivery, yeah, we can see price is dropping down, it leaves us this fair value gap, right? It also chases down this low. So remember what we said, yeah? Price is seeking liquidity below an old low. In this case, because we're in a sell program, it's then looking to rebalance a fair value gap, move down to an old low, yeah? Continues to move down, then makes this fair value gap, right? It then goes down to clear out a historical low over here, yeah? Returns to this fair value gap here, and then sells off again, where targeting the old low, yeah? We then set this low here. Our expectation now, once we've set that swing low, is for price to then come back, rebalance this fair value gap, and trade lower. It doesn't do that. So let's imagine we get a loss here. However, when we close above here, we've violated this, right? That should be suppressing price. It's not. When we close above it, it becomes this, which is an inverse fair value gap. Price closes above it here. Our expectation now is for price to draw down, enter a buy program to attack the stops above this high. Yeah? Then we've taken this high. What are we then looking for? We're looking for price to retrace, yeah, into this, which is our PD array, premium discount array. Yeah? So if we're looking at this as our leg, why would we look at this? So this is our dealing range. Why? Because we've swept liquidity below the low, we've taken liquidity above the high. So when we've swept the prior day's high, as we see here, our expectation now is for price to correct, yeah, to a fair value gap or some kind of array that exists down here in discount. That's how we get the conviction when we reverse to trade down to a certain level, right? You can notice that we don't have anything clear and obvious in here, right? Just move that back a minute. Actually, delete that now. And we don't take out this low. Fine. We do form this swing low upon this. When price returns here, yeah, our expectation is then to say, okay, well, we expect a corrective move if we're going to move lower. Why? Because we've swept, we've come down, but the thing to remember here is we haven't lost market structure, right? Low, higher, high. This is now forming a higher low, yeah? But we don't get that confirmed until the close of this candle. Whilst we have this bearish fair value gap, we are still looking at this to either correct or close above. If it closes above, which we get with this candle here, what have we then done? This then becomes an inverse fair value gap, as we did with this one, meaning that we're looking for this to act as support. Meaning that here, we're then chasing down this high first of all, which we see we don't get here, but price expands and takes it out here, and then takes this out here. So where does that leave us today, right? Well, it leaves us at the moment that price has taken out this old high, yeah? So our expectation now is that price is coming down to engage with a fair value gap, or in this case, an order block, right? So where we are here, we're still currently bullish. So price pulling into this area here and into this order block would have us looking for long trades, all right, long setups. So a way that you can do this and a way that you can practice this is mark everything out with the power of hindsight. Yeah, people will tell you, you're not doing it live, it doesn't matter. Nonsense. You need to get your eye in on this thing first before you can then take this to live charts, right? Otherwise, you'll just frustrate yourself. So, with where we are here and everything we just covered, yeah, we're going to mark with arrows where we're bullish or where we're bearish. Yeah. So let's just start, because we've been going back so many days. Yeah. Let's just start from here, shall we? We're engaging with this. So we were short from here. Yeah. What happens? Price runs this low. Our expectation is for a corrective move higher, right? We run this low with this candle, meaning that the following day that we're looking for higher prices. Yeah. Only incidentally into here, and then we would be looking to short. However, we don't actually get that stop until we get to here. So we run this high, following day, we are bearish. Yeah? So good question here, FR33 Will. Do the fair value gap and inverse fair value gap work on a 4-hour and a 1-hour time frame? Yeah, absolutely. The key thing is here that you want to just make sure that whatever time frame you're trading on, you're using almost like a triple screen method. So for me, I use the daily to frame my bias. Yeah. And then I use really the kind of hourly to 15-minute. I use the hourly to then look for my PD arrays, meaning my fair value gaps, order blocks, anything of keynote. Yeah. And then between the hourly and the 15-minute, which I'll show you as we move into the lower time frames, I'm then looking to frame my premium discount or my dealing range. I'm always playing that off of my daily bias. Yeah. And then I'm looking to execute, which is my third screen, between a 5 and a 1 minute chart. Okay. Which I'll run through with you as well. But really, really good question. If you've got any more as we go through, please don't hesitate. So bearish here. Yeah. Now, as we're dropping down here, we're still bearish. We're still bearish because my expectation here is for us to reach this old low. Yeah. However, we do have, as we have to remember, yeah, because this is our dealing range here, and then we extend it up to here. Oh, yeah, using this high here, right? Extend it up to here. We do have to respect the fact that we're bullish, right? So we might not reach for this low. We could just be looking to rebalance this inverse fair value gap, or not rebalance it, but use it as support. So here we keep our bias as bearish because there's expectation that we could be reaching lower here. However, we also want to be nimble with it. But I can't just flip bias here, right? What I can do is when we've set this swing low, 1, 2, 3, right? Then I can start here saying to myself, okay, there's an expectation that price could be drawing further up into this. Yeah, because we've closed out here. We've set this swing low, meaning that price could now be looking to set the swing higher. So see, I'm just following really, really basic principles here, guys, using the daily. Let me just get rid of that. So price comes up into here, right? Now, once we've actually purged into this and we close here, my expectation for this day then becomes bearish. Why? Because we've got this order block with a fair value gap after it, meaning that we expect this to reject price. Yeah. And also, we're still within the body of this bearish fair value gap. Even though our structural bias is telling us this could be pushing higher, for me, I'm always respecting our high time frame PD arrays, meaning our premium discount arrays. So this is up in premium, meaning that we're still favoring to short. That means that although I'd happy to scalp long here to get and fill this fair value gap to push us up into premium, when we get up to here, I'm actually looking for this to be rejected. Yeah, and to chase down this low. What happens? I'm wrong here. What happens? Price then takes off because it swept the prior day's low. Yeah, let's just do that as a dotted line so we can see that sweep on when we move to a lower time frame. Yeah, it sweeps, then we close above. Soon as we close above here, right, and we make this inverse fair value gap, from this day, I am bullish. Then what do? We take out liquidity here and here, which means I'm then expecting a correction, yeah, back down to our array, which is this order block or this inverse fair value gap, right? So that would only happen here after this day has closed. Now, before I go on and we then decant this down to an hourly, does that make sense to everyone? Is that clear? Is there anything anyone would like me to go over there in terms of how we've ascertained that bias? Price is either chasing down because we're in a sell model here, we're bearish. That means our daily fair value gaps are rejecting price. The order blocks are protecting it. bearish fair value gaps, defending price. We're still pushing lower. Where to? To attack the sell stops. Yeah. And then we ultimately attack the sell stops here. As soon as we attack these sell stops, yeah, perfect. Okay, nice. It's not. I'm not trying to be a twat about this, guys. I just know. I remember when I was learning this years and years ago, and then just it really took. I was like, yeah, that makes sense. And then everything went away, and then I went onto the charts myself, and I'm like, oh my god, I just feel lost now. Right? Brilliant. Okay, so now we're going to take this down to an hourly. Yeah. So let's just draw a line on here to show. Well, really, actually, we're kind of interested about here, aren't we? All right, do that bright orange or something, yeah, to show us this is our trading point. So we're going back here to the 18th of September, yeah? Now, we're only allowed, well, you can counter trend trade, of course you can, right? And like I've said to you, I've even shown you one here because our conviction is that this is pushing itself up, right, into this fair value gap. But if you do counter trend trade, which we're not going to focus on today, I always reduce my position size, right? Because I'm not going with the high time frame bias. All we're going to focus on today is being patient and only executing, yeah, with our bias. Meaning that when we look at the day, if it's got a red arrow above it or it's in a red arrow continuation, we're just looking for shorts. If it's got a green arrow or after a green arrow, before we get to a red one, we're just looking for longs, all right? So now I'm going to drop down to an hourly chart, right? So for the sake of the data, what we're going to do is I'm just going to run through this. Let me just compress that a little bit. And now we can see what we've got here. Yeah? Hello, Pup. Sorry, my gorgeous little husky's just come in. She's been out for a walk and looks full of mischief. What are you doing, you nutter? Oh, brilliant. Yeah, awesome bit of info there from Hans. Sorry I didn't think about this, but if it is poor quality, guys, maybe it's YouTube that have kind of downgraded it. They've been doing it a lot with videos lately. I'm not sure why. But yeah, if you are struggling with that, please do change your settings on there. All right. So, Husky just running in, just doing zoomies around the office, and then just running back out again, being a proper goonball. Right. So, as we now look at this on the hourly, right? Yeah, you know it. I will be. It's actually a girl, FR33 Will. But yeah, she does. Much more when she was younger. Used to howl and sing all the time. But now just kind of tells me off with little grumbles. Like, especially when we come back from holiday and then it was just like she was just going nuts. But can we all see this clearly, guys? Yeah? What we've got here is we can see sell day, buy days. Yeah, buy days through to the sell days through to here, buy days through to this one. These were all sell days. Move this up a little bit. Look at all these beautiful bad days. No, not at all, mate. To be honest, I do it with all dogs as well. I think there's just a habit of just calling dogs boys because you just don't really know, do you? Unfortunately. So here, buy days. Look at how this all worked out really nicely in terms of this. Now, just while I'm here, let me just frame a few things, right? So if we're using this, and like I said, I use this time frame to look at the fair value gaps, and I'm looking at the dealing ranges. So for me, I'm looking for an obvious impulse move that has taken out sell side and buy side, or buy side and then sell side, right? So what do I mean by that? Well, this, really, right? So see when we come down here, we've taken out this. Actually, let me zoom in because I know the quality is not great, is it? Right, and this is actually quite a tricky one, right? This is our high time frame, yeah, our daily level that we're looking to run. So there's our liquidity also here, right? Now we can see here that price has run this low, but also this low, right? So I'm just going to draw that into there. Let's do that a different color. Let's do that teal. No, you're never going to see that, are you? Go for orange. Why not? No, you can't see the orange either. All right, we just go for this green, yeah, because it does stand out. So we've swept that, and then we've also swept this liquidity here. We've swept this liquidity here, right? So let's just do a continuation from this one, for example. And now we can see we've taken the sell stops, taken the buy stops, and as we go up to here, we can see we've got this leg that breaks down. So all we're saying to ourselves is, okay, well, if this is our dealing range, if I'm still bullish, yeah, QVS, my man. We're not going to pump Pepe for him, are we? Absolutely not. You know why? because he's such a sick little trader, amazing graphic designer and that as well. But what he will do is he'll convince us to pump Pepe to fill his massive size, and then he's going to use us as exit liquidity, right? So always be careful of these people. No, I'm joking. He's a top guy. Also, Cuba, while you are on the stream, mate, Cuba takes care of our technical stuff. Apparently, the stream's only going out at 720p, so it's been a little bit hazy for people. I don't know if that's anything that your technical wizardry can work around, my friend. So this is our dealing range, right? What does this mean? It means that we're favouring shorts from up here and we're favouring longs from down here. Now, I think this is where people go a little bit wrong sometimes, is people kind of say, okay, well, I just want to short this all the way down. Well, no, or I don't want to short this. I want to wait to go long here. Well, fine. First of all, in terms of framing, this is the fair value gap I'm interested in. Yeah? So this, remember, is our daily high. That's the key liquidity that we want to see swept. When this gets swept, that's why this day goes into a sell model. Now, I'm not saying that we're going to reverse the market. I'm just saying that the price is most likely to pull back, to a fair value gap or order block, or consolidation that sits within the lower 50% of our range, which is in discount, But what it does mean is that I can then trade these moves. So we step into London here, and I can say to myself, right, what do I want to see? I want to see a high time frame sweep, which is where the 15-minute comes in. So is everybody tagging along now? I'm still going to give a few more of these examples as we go, right? I'm just using this because it's literally yesterday's trading, right? Remember what I said. We dealt with this on the high time frame, which everyone had a really good handle on. So we know we're in a sell day here. I'm not saying that we're going to go all the way down here. That wasn't my expectation. I thought that we would possibly correct to here and then look to move higher, right? However, I have a key set of parameters, And those parameters tell me that if we get down to this, and I'm looking to say, okay, well, we might flip long here. So I'm short through London, which I'll show you in a second. When we get here, and I shared this on Twitter, then it does, Dave, it does look a little bit like a big old head and shoulders. And what I shared on Twitter, this is my point of interest for Euro USD, was this hourly FVG. Let me actually make that green. Right? Now, when price gets here, am I just blindly longing this? No. I'm looking for, on a lower time frame, our fractal pattern, which is this. So imagine this, in this area here, we get this lower time frame pattern, which is this. We get a sweep of liquidity, break of a high, displacement, and then we're moving higher, In here, we're targeting the fair value gap, and that's our entry, Zoom in for you a bit more. That on, say, like a 5-minute chart is what we'd be looking for. But we didn't get that. You can see by these candles we didn't. And I'll leave that there for when we drop down onto the chart so that we can see it, right? No, I won't actually, because it's just going to muddy it up. You guys know what you're looking at. Now, when we step into New York PM, why did I then switch my bias to bearish? Anybody got any ideas relating to this fair value gap? So I was looking to long here because we're high time frame bullish into here. The reason that we've got this is because we're expecting a pullback. It means that when I get to here, I'm neutral. I'm looking for conviction that is going to be given to me by this fair value gap. Now, I just showed you with that pattern, what we'd be looking for there. Boom, there, exactly, Geo, right? We close below it. And exactly. And we get the break of structure a little bit later here, Hans, as well. But that is a really, really good point. Boom. Boom. Love it. And we get this afterwards, Hans. But what I want to focus on at the moment are these closing under it, which happened here, right? So let's do another little arrow here. So we closed under it here. That means this one here, which we'll do in orange to depict that it's an intraday movement. When we've done that, this hourly fair value gap here becomes an inverse fair value gap. We expect this to now act as resistance. What am I targeting? These beautiful relative equal lows. So let's just draw that across there. Right in our equal lows. So just framing this day, yesterday, Tuesday, we've run into our daily level, Our expectation is for price to pull back. We're not saying we're going to reverse the entire market here. The assumption is that price is going to pull back to find itself back within discount, so that we can long. So then what we're doing is I'm taking the hourly down to the 15-minute, right? Remember that arrow has been put on the relative candle. So that's after the close. So we're not cherry picking this, right? Just need to draw that across. So now on the 15 minute, 15 minute tells us a lot. We're looking to be short from up here. Yeah. So all of a sudden, when we're using things like the 15-minute chart, I'm interested in the key highs and lows. Yeah, that's the main thing that I'm looking at. I'm not really looking for order blocks here. What I'm looking for are for key indicators, things like this. This high, yeah? This is the high of Asia. This is Asia's range, yeah? And this is the high of Asia. So we sweep that here. AH, standing for Asia high, yeah? Or any key liquidity. What else can we overlay here that gives us a bit of conviction? Well, there's this bullish fair value gap here, right? Now, don't get me wrong. Yeah, we've had this big, strong move below it. That becomes valid here. Yeah, when we close below this, that becomes our inverse fair value gap. Yeah, so if you're looking at this on a 15-minute, you would then have your breakaway gap here. Yeah, order block is set, which we expect to defend price. Fair value gap here, which we just tag here, I believe. Let's have a look at that. The high on that one is 106538. The high on that 36. Boom. So that's our entry. We're then chasing where to? Just down into here. Yeah. If you just even look at that as a sell and you say you're tagged in here, your stops can go above here. Yeah. The origin of the fair value gap candle. And then we just want a minimum of a 1.5 R trade because our expectation is that price is going to hit our hourly PD array. Yeah. So 2.53 R trade. Lovely. Just on the chase. Yeah. But before I digress too much, what I really want to kind of look at is quite often these reversal moves, yeah, are framed by inverse fair value gaps. Yeah. Like here. I know it's not the cleanest, right? But on an hourly, you'd probably find something that was a little bit better, right? Price comes up, bearish. Expect that to defend. It doesn't. Keeps going up, right? Comes down, comes into this high. That's a trade. From there to there is a trade. We then purge, we come back, take this high, and we don't return, right? But it's something that I would always keep my eye out for, okay? But what I want to show you really, for me, is the 5-minute chart is where the magic happens, right? Because if I want to trade aggressively, we can see what happens here. We run Asia's high. Price comes up, expands higher. This is our 15-minute, remember? Remember, price is fractal. So when we expect this to defend price, and it doesn't, let's get rid of that for a minute. If we're taking a more aggressive approach, what's price done there? Closed below. Our expectation now is to enter into a sell program here, chasing down lower, right? Why? Because what gives you the conviction is seeing this, yeah? All this red until we get down here. Now, the next thing I want to focus on is then the continuation within New York, right? So, beginning of the New York session, our bias is bearish, yeah? We want to see price draw higher to engage buy stops. There's our buy stops. Price has moved higher to engage those, yeah? We then want to see price break down with conviction, right? Leaving displacement, which are these fair value gaps, yeah? And then if we're looking at this as a sell model, remember, like I said, this is our reversal, yeah? Distribution, yeah? Or distribution, redistribution, and then you look at this as the reversal, right? However, remember, if we're framing this on the hourly, what we said, yeah, we're live from this arrow. What has this just done? Price has come up and engaged, which I'll do in red, with our 5-minute fair value gap. And what else? This order block. What has that done? That has just layered 2 levels, right? And okay, we know and we obviously have to be aware. We know and we have to be aware that we're now trading in discount, meaning that we should be favouring longs. However, the reason that we would chase this, and you can do it with a reduced position size, is because of our high time frame equal lows. Yeah. So even if we're waiting for the conviction on the hourly to show us that, well, what have we got? Price breaks down, yeah? Continuation here as it shifts, it continues with structure but low, rebalances a fair value gap into this order block, price then breaks down with displacement, yeah? If we then take this displacement leg here, which is simply this high to this low, the shift of structure or the continuation, we're then looking for the fair value gap that exists in here, yeah? So all of a sudden, we're short from here, stops above this high. I always do it a few points, and then do we have 1.5 down to our key target? 1.65. We can move our stops to entry there, and then that allows us to then follow that down to our pre-assigned target, right? Now, if we jump back up onto the higher time frame, we can see that today we're back within this inverse fair value gap, yeah? Price is finding support here. Now we're saying to ourselves, okay, well, zooming back out again, have we changed our daily state of delivery, yeah? Have we changed our daily bias, sorry? No, for me, we haven't run anything key. We might find support here, yeah, that could push us higher, but we know that we're in a bullish structure, right? So what we're actually saying to ourselves is, okay, well, with our dealing range, we might get a deeper correction here, but at the moment, we're not overly certain. So does anyone remember what I said when I was talking about the idea of if we're not really clear on the bias, what we can do, we can move to our session liquidities. All right. So let me just go back a second. Just a couple of questions on here. FR33 Will, what would you recommend as a practice so we can start to see all these details in real time? Looks like a lot to understand while price is moving. Yeah, really, really good question, right? So I'd either use bar replay mode. Yeah. So I'd go and draw out your daily bias. Yeah, take price back to a random point on the chart. Obviously, you're fairly limited for how far these can go back, depending on your membership, your subscription model. Sorry, but just plop it in here and then see what price does as it develops. Yeah, and also do like we're going to do now. Look at today and say, okay, well, from here we can see price doing a couple of things. Yeah, we can see price now. For me, on a daily scale, we haven't run that low yet, so actually the dealing range, realistically, is still this. Yeah, so you see how we've just snuck our way down here, yeah, into discount, meaning that we favour longs. So for me, I'm saying to myself, okay, if we're favouring longs here, but I'm really not crazily clear on that, then I can drop down to my hourly, see if there's anything giving me some real conviction here, right? And again, this will very much depend on what type of time frame trader you are as well. Yeah. Obviously, remember, we're in equity we're not in equity markets. Equity markets, we would start an hour and a half later, which is what we align with crypto as well, which I'll cover again in a minute for you guys who are really heavily into your crypto. So from here, I'm kind of saying to myself, all right, well, what have we done? What are these? Equal lows. Yeah. So let's just change that very quickly, because actually all of a sudden we're starting to kind of paint a picture here, right? So we've got these equal lows. Yeah, we've got these other equal lows here as well. It's like, oh, okay. So maybe this thing drops a little bit deeper into these as well. So let's draw those up. Right. And now on an hourly scale, you're kind of saying, okay, well, price has now taken kind of a high here and it's taken a low here. So our kind of dealing range now expands back down to this. What we do know, however, if we just move this a little bit lower, is that if we extended this across, that our hourly dealing range is hugely encouraging long setups. Yeah. It doesn't mean that that's going to be right, but we have to stick with our conviction, right? So all of a sudden, what story am I telling myself? I'm saying price has run. Yeah, look, because price ran equal lows there, and we got enough of a reaction there, yeah, to get a day trade in. I'm not saying we would have taken it, but there was. So now, in theory, if this is enough liquidity to reverse this, yeah, then we should see that similar move, at least a correction up, yeah, to the 50% of this, or ideally something that's moving up into this order block, right? To have that conviction to then get in a sell program again or move higher. Hasta la vista, Barbie. Hello, mate. Fantastic to see you on the stream as always, buddy. So does that make sense, right? And now we want to do some real look at this, right? And say to ourselves, okay, well, what's going to give us conviction to move on this? So 15-minute chart. Now, this is where we can look to the midnight open. We haven't had the 8:30 open yet. Forget that because that's from yesterday. The midnight open, that's New York midnight. That's 5 a.m. my time, right? If I'm looking to be long, yeah, then I want to see price trading below this, and then I want to see conviction to go higher. Now, like I said, remember, I use the 15-minute to frame these things. It's the lowest time frame that I'll use. So for me, while we've got this bearish fair value gap here, what would I want to see to have conviction as a buyer today? I would want to see a 15-minute close above this, which we'll do in green just to show that that's what we got. So a 15-minute candle. Yeah. Close above here. Then all of a sudden we can say to ourselves, okay, can we bring that fractal pattern back? Yeah. Do we see when we get above here on a lower time frame, that sweep, that impulse move higher that leaves displacement, in which case we can then look to trade this. I would be aware of these highs here, or if price is coming in, but ultimately, remember, we're actually looking for price to make a deeper retracement, and it could very well, I know this is a little bit lower, but where this has played such a key role, that's what we would look at, yeah? Yakuza Kano, hello, my friend. How the devil are you? FR33 will. Yeah, so basically what I would do here is if we closed above here, I wouldn't just kind of put a limit order here to enter. You can do that, and that's still very viable, right? But let's say we do get that close above. Yeah, and that does become an inverse fair value gap, this one here. Then I'm looking for this pattern on a lower time frame. So let me show you the pattern that I'm looking for. Right, see this? So as we're looking at over there, we're looking to run a key time frame. Yeah, so on the 15-minute chart or on a daily chart, we've got these equal highs. That's our high time frame level that we're interested in. Now, we move into London. This is where our kill zones come in. Yeah, see these? I'm only looking to take trades within these sessions, right? What happens? We get a clear and obvious move. As we spoke about earlier, right? And again, we can track this back to Asia. That's our Asia low down here, right? So let's just use this as an example. Here's our consolidation, yeah? Here's our manipulation, just that little run below the Asia lows, engaging these equal lows as well, right? Convincing the market to go in the opposite direction to where smart money wants the market to actually go. And here's our expansion. Yeah, it takes a little while to get your eye in on this because it doesn't always see it, so you can look at it. But what I would say is that when you look at it like that, you start to see these things all the time, right? In the same way that you'll see your buy models and your sell models. But don't focus on the complexity of that. Focus on the simple stuff first. Focus on getting your daily bias right. Focus on getting into the charts and saying, okay, if I'm bullish today, yeah, then that's where I want to step into. Oh, okay, interesting, Dave. So I think I would short this to close at 1.05. Cool. Well, let's take a look at that in a second, right? But just for FR33 will, this is the pattern I'd be looking for, right? Or let me just delete this quickly and show you exactly what it is I'm looking for, right? I want to see a sweep, which is this, yeah? So sweep of the high time frame level, but we also sweat this local level as well, right? Then I need to see a market structure shift or break with displacement, right? Let me zoom in so you guys can see this clearly. So remember, we're going to go back to this in a second, and this is the pattern that we're looking for. So let's imagine this is price driving in and taking out those stops that we said about, yeah? Then we get that expansion higher, yeah? So you can do one of two things here. You can look at this displacement leg, which is this, and then you want to target the first fair value gap that's down in premium, in discount, sorry, yeah? So how you would play that is that as price comes up here and we set this higher, you mark it. Imagine all this stuff hasn't happened yet from the right of this. You would mark it there first of all, Then when you set another high, you would mark it there. It's the fact that you get the down close candles that make you aware that this expansion leg is starting to retrace. And then we quite simply focus on this. I'll just do this in black actually, guys, because I'm not sure you can see that. Yeah, that's the fair value gap we're targeting as price comes back. Now, if you're struggling with that, or you want a cleaner, or not a cleaner, but just a slightly easier method, right, whilst you're getting your eye in, use the market structure break or the market structure shift. Yeah. So wait for the shift in structure to be powerful, yeah, to leave this displacement. And then I used to call this a breaker line. Right, and all you're doing is you wait for that powerful move above, and then as soon as you close above it here, yeah, as long as you've got a fair value gap in this run, then you simply set your limit order on here. You wait 5, 10, 15, 20 minutes later, you're tagged in, your stops go below this old low. And then what you're simply doing is you're looking for previous key liquidity targets like the previous high of day or anything clear and obvious. So you've got the kind of liquidity sitting up here. Yeah, that was swept, came back down. Triple drive pattern here, 1, 2, 3, almost a quadruple, but certainly 1, 2, 3, and then price sells off looking for sell side liquidity. Yeah, so this is the pattern we'd be looking for if we wanted to go long up here. We also, okay, good question. So we have a lower fair value gap. Yeah, we absolutely do. So you could target that as well. You mean this one? Yeah. So you absolutely can, or you can split orders. What I would say is, personally, I look for the closest one to here, because if the conviction of the market is strong, quite often you don't get the deeper retracements. And actually, you'll find sometimes you don't even get the retracement down into here. However, what you can do is put some of your order here at this first one and some of your order here on the second one. Then that way, at least you've got some skin in the game, as we'd say. And if you get the deeper retracement, then you're really laughing. All right. So let me just flick ahead to where we are now. So like I said, that's what represents this pattern. Yeah. What we would be looking at here is that being the sweep, this being the shift in structure, and we would either carry that forward and our entry would be here, yeah, or we would wait for that market structure shift and we would then look for our fair value gap that's down in discount, yeah. That would be our entry and our stops below this low, right? But again, I'm not going to look to enter anything like that unless we get this. And I would want to see this 15-minute close above. Why 15? You don't have to use 15. You can be more aggressive than that. But for me, you know, once I go on to the 15, I can start telling my story, right? If we inverse this, then my conviction is that we're reaching for at least these highs, yeah? Meaning that I can drop down on a lower time frame. Let me get rid of this in a minute. And even if price does something like this, right, and then we get that move and price rejects here, right, as long as with this initial move up, we don't take out this internal liquidity target, so we get that big close above, then we get our pullback. Well, then I'm a buyer here, at least to here, as long as I've got a 1.5 risk to reward, and then I can move my stops up. Yeah. Let me just have a little look back a second, just because I've got a few questions in here that I haven't dealt with yet. Okay, yeah, really, really, yeah. Thanks for that, Gio. Yeah, sure. Try cryptos if it is something you're interested in, mate. All of these are available free on the Bird Nest YouTube stream. You can just look for my ones, BC Richfield, and I do cover a lot of these. If you've got any specific questions, do let me know. And on Monday's live stream, we can look to tackle some of those quickly at the beginning, maybe. Powell speaking today. Great news update from our man Hans. Very true. So be very aware of that. That can move markets, obviously. Okay, shorten this down to 105. Yeah, no, I can see that, mate. I can see this pulling higher. We scalp this higher, and then I can see that completely rejecting off one of our PD arrays there for sure. And again, we don't have to predict that. We can just wait and watch and see if it gives us conviction when we're there. So is the midnight open known as the true day open? It certainly is if you speak to ICT, Michael or any of his real purists. I can't argue with him because the guy's sensational, right? And he's taught me a hell of a lot, but for me, there's only one true open, and it's midnight, real midnight. Yeah, that's when the markets reset. That's what dictates our sessions all over the world. But midnight open, which we can see here, is really important because what it helps us do is we want to be, again, like our premium discount, we want to be sellers above it, buyers below it. We then tie that in with our daily bias. Our daily bias is bearish, meaning this morning that when we stepped into The London session, yeah, what are we doing? We're engaging with this fair value gap over here. We draw that across. Also, this order block. Boom, right? Let's just do it really quickly. Yeah, so fair value gap, big old order block above it. We're expecting the suppression of price, and our high time frame bias is bearish, meaning that at 7 o'clock this morning, or normally about 5:45, when we're monitoring the pre-market, what we're looking for is, this is true day open, as ICT would call it, midnight open. We're looking for a sweep of that, which we get. We're looking for our market structure shift, which we get here. And then even if we were entering this on a 15-minute chart, we can see quite clearly that we have a beautiful FVG here that allows our entry. And then we would be looking to trade it down to these liquidity targets lower. Yeah. So that's how we're looking. That's how we're always looking to frame it. All right. And again, just all based on the high time frame bias. So these are just different tools in the arsenal that you can kind of get put together from ICT. Don't try and use them all to get the things that really speak to you. Okay, good. Another good question here from Nick. Is it always best to target the kill zone, target tie-in with the previous day's high and low? No. What I would say is the previous day's highs and lows are really good liquidity targets, but session liquidity targets are good as well. The key thing is to kind of stay in tune with your high time frame bias. So if you're bearish that day, take a look. Look, if you have this huge move in London, or if Asia just wipes everything out, don't expect too much from the session. But if you've got those key session liquidities that you can target, like the Asia range, yeah. So, for example, if we look at Asia's range here, yeah, it worked really well for us again, right? This actually shows it really clearly, yeah. So, Asia's range high was swept here, yeah. Price breaks down, shift structure, gives us our sell program, right? So just turn that off just so we're clear again. But yeah, frame your daily bias, work out where you are, use your premium and discount to find the arrays that you expect. Otherwise, you'll just start targeting everything. Like you break down to here, for example, be like, bearish fair value gap, less short, and then you get obliterated. You go, well, why did that happen? It's like, well, haven't taken account for premium discount. It doesn't always work, and you do need to manage risk on things like this, right? Because, for example, you've got, that's your sweep there, so there's your premium discount range there, and we didn't retrace all the way up here. Yeah, but our conviction was built differently here before this because we had the equal lows below, and that's something that you can only really ascertain through testing some more. Let's have a look. Where would your stops go on the previous example? So FR33 will, if we were using this as an example here, then what I would want to do is, if I'm here, for example, and this could be a good example here, right? Because just as we were talking about here, if we are going to look to violate this, here's our bullish fair value gap that's created under this. If we now get this 15-minute close above, yeah, then what I'm looking to do is impulse move higher, yeah, and then take that. Let's say that's our entry in here. My stops go below the price swing low, yeah. Now, if you've got a fair value gap residing below that and you feel like price could drive lower, then favour the swing low before that, as long as obviously it allows you the risk and reward that you need to get into the trade. Yeah. So just to show you that as an example, this is our risk to reward. Let's say we buy as here and our stop loss is here. But if we're worried because that fair value gap and think, well, price could really drop into this, we're expecting these down close candles, by the way, now to support price. But especially if you're doing this in crypto, it can have a bit more volatility. So if you are going to then adjust for that, you need to then be aware, okay, well, where's the first point that price could reverse here? Probably here, if we're wrong, yeah? So all of a sudden, at 1.18, you've got to ask yourself if the risk to reward is worth it. If this was our key target, over 1.5, then, yeah, I'm a little bit more interested in that. But that's where it comes to a little bit of a balance. Good question here from Gio, actually. So in the case of multiple fair value gaps, you ever move up a time frame to find a single one? 100%. Yeah, I want to find the singularity. So what Gio means is, like in this section here, 15-minute, we've got, 1, 2 fair value gaps here. Well, on a 30-minute chart, yeah, we can see we've got this here. Does it represent on an hourly? Yeah. So then all of a sudden we're saying, right, well, if this is our displacement leg here, then this provides a really nice clean target, doesn't it? So then when we drop back down to the 5 minute, we can see here that all of a sudden we've got a pre-made target here that we wouldn't have been aware of here, but actually we would have done because of this swing higher. Yeah. So now when we're here, we're saying, okay, maybe we're a buyer here. Oh. Yeah, on this pullback, we've got conviction, so our stops are going just below this low. Yeah, and we're saying to ourselves we would want to make at least to the kind of equilibrium of this, which is 1.6. And again, I think once we start to engage with this here, I'd be moving my stops up pretty quickly to just make sure that I can get out of the trade risk free if I'm wrong. Yeah. Again, I'm not saying you guys do this, just how I've tested it over the year. I'm a very risk averse trader. I know that costs me some R in a lot of sessions, right? But I actually, overall, it helps me kind of manage my risk and my exposure really well. So, let's watch this develop this afternoon. Come and ping me on Twitter and stuff, guys. Yeah, if you've got any questions and bits and pieces. Hopefully we kind of looked at hopefully we touched upon that enough that was clear enough for you guys in terms of using our kind of building out on the premium discount side of things. One last thing, actually, just very, very quickly that I'd just like to leave you with is when I was talking about session liquidity, yeah? So remember we've got our Asian session liquidity and we then have our session liquidity. So just go back and let me just delete this for a minute. Let's have a look through the different sessions, right? So Asia high is here. In London, we've swept Asia high. We've got a daily bearish bias. We're looking for price to move up, yeah? So accumulation here, manipulation, distribution, yeah? Our power of 3. So same thing here, stepping into our New York session at midday. What are we looking for? Price to engage the buy stops, which it does here. Price to then break down in structure, retest, and then sell off, yeah? So when we're looking at sessions, yeah, they work in a very similar way. Let's just scroll, hang on, as much as this will allow us, just to a random point. Let's just take this one. See this choppy day. Remember when we were looking at this saying Friday, we've got a bullish bias, but the price action's messy, yeah? Asia's here. So let me show you how we would trade this. Remember what I said about Asia, yeah? So we need to be actually, if I can just, let me draw a box around this and then turn this off, because what it's doing is it's kind of overlaying our, I just want to turn this off because it's overlaying our kill zones with a different indicator. Right, so Asia's range. Trade this forward, where? Into the beginning of London. Sweep Asia's range, yeah? Up to Asia's high. There's our first trade of the day, right? Now, like I said, we're uncertain. The day could be consolidating, in which case you're basically going to end up with a range day, yeah? I know there's one of these here is a range one, isn't it? Let's have a look. This maybe. So if we're looking at this, even if we're kind of looking at it really roughly as this to this, price is just pinging between Asia's range. Look, long it here, short it here, long it here, short it here. Right, just to get an example. But overlaying this in our sessions, Asia's range, and this is what I mean by liquidity, so internal liquidity, right? Or, sorry, session liquidity, right? We're moving into these consolidations, which you'll often get after moves before, big day moves, yeah? Then we trade the sessions. We're in London. What do we see? Price runs the low. Let me just zoom in for you just so you can see this nice and clear, and then we'll finish it for the day, yeah? Price runs the session low, then shows us conviction, takes out this high with displacement, with buyers in this fair value gap. Where to? Asia's high, right? Then what happens? Can you guys see this blue box okay? Let me just draw a line on the top. So this is London, yeah? From here to here. London low is there, London high is here. So what do we do when we move into New York, right? Quite simply, we look for that to be run, break down, right? Conviction, and then we're sellers, right? We probably get out of this one at break even. Maybe we even take a small loss, but on the lower time frames, you can get involved in those trades, yeah? Now we move this higher, right? Where? Because that is London higher, yeah? That's New York AM session, yeah? That's the high of that session. We're now in New York PM session here. What are we looking for? Same thing, right? Price comes down, sets this low, breaks down with displacement. We're then in here. There's no fair value gap on the 5 minutes, so you'd move down the time frames, either that or you would look for order blocks. Yeah. And again, I don't really want to go into too much of the teaching methodology on this at the moment, right? But that's our order block. If we haven't got displacement, but we do have a strong move lower, you can enter here, but it's not up in premium, right? So you enter here and your initial target are the obvious lows. Yeah. So that's what you can do with session liquidity, especially on choppy days. Look for high of day, low of day, prior days high, prior days low, and then your session highs and lows. And if you get your signature patterns, I mean, look, this was good, worked out really well. Yeah. We had that displacement there before we got to our first liquidity target. That would have had me as a seller, right? This one, in truth, when we came into here, after that big drop and we've taken internal liquidity, I wouldn't have been looking for the pullback into there. We've just had too much play out. Sometimes you'll get it, and then you'll get a real ripper of a trade, right? But just for me, I steer clear of them. This one for me was the cleanest. Asia's low, big expansion higher, lovely fair value gap to enter, and a beautiful like 2.5, 3 hour trade there. Yeah. Awesome. I'm really glad you enjoyed today's session, guys. Hopefully making these a bit more useful for you and a bit more hands-on, looking at some kind of real-life examples. Let's just flick forward and see what price is currently doing. You see how it's kind of just a little bit uncertain here. If we kind of tried to force this on the 5 minute because of this, then we'd be a little bit worried now. Wait for those kind of 15-minute closes sometimes really, really helps. FR33 Will, do I have different kill zones for crypto? I do, but only London, right? So if I'm doing Forex, I start the day at 7 a.m., right? That's my time, starts at 7 a.m. Yeah. But what I need to be aware of is that I'm also starting this day. If I'm trading crypto, I still keep London at 7 a.m., but I'm starting this at 7 a.m. New York time, which is midday my time. If I'm trading equity markets or cryptocurrencies, yeah, let me open this up for you. So forget these on here. That's London, that's New York AM, and that's New York PM. Yeah. New York AM session, if I'm trading equities or crypto, I'm moving to 8:30. Yeah, meaning that we haven't started this yet. And just to show you the difference in that, let's go to Bitcoin just for example. Bear with me a second. This Bitcoin chart often takes an age to load. I have so much crap on this. I really need to clear it off. So let's just see if it's going to let us play. But just quickly to finish this off here, because it is a really good question. I know a lot of people here as well do trade crypto and also equity markets, right? So your NASDAQ, your S&P 500, or your ES, which are your mini contracts. So let me just wait for that to load for a second. See, yeah, there we go. It's going to let us play ball. Right, sorry guys, I know this is kind of rambling on to another hour and 15-minute session, but hopefully it's of value. So, for people that were saying to me about the use of Midnight Open, yeah, remember what I said? Here's our start of our trading day. We're looking for a correction. What are we looking for? I want to see Asia's low taken out, which is here, right? Asia's low gets taken on Bitcoin this morning. What are we then looking for? We're then looking for our structure shift, which happens here. I'll draw it across so you can see it nice and clearly. We're then looking for our displacement leg. Yeah. Bloody hell, I should have traded Bitcoin this morning, actually thinking about it. Here's our fair value gap. So you were a buyer in here this morning. And my first initial target would have been these equal highs here. But ultimately then looking for price to obviously reach a bit higher into these prior day highs. Yeah, so you get yourself a nice 3.3 hour trade to start the day. No problem. Always easy to say it with hindsight. We didn't take it live, so it doesn't really mean much. I actually won't be doing live trading this week, purely because I have so much stuff to catch up on. And we've got so many amazing things happening. And after quite an extended break, I really need to get back on top of things. But it's always the way you look at this, it will really kick you in the arse because we've had some really great trades this week, although a couple on FX that I've shared. But just before I waffle on too much, mate, basically, look, see with this one, see how this AM session, just move back to here. Right, so we've got our AM session here, yeah? That now starts at 13:30, meaning that if I have a bearish conviction here, which we've run prior day's high, yeah, then I wait for this to come in at 1:30. What I can do, I think, actually, is if I move replay back to here, it might actually give me the 8:30 open time as well. Flick that forward, it does. Yeah. So remember what I said. Here's our 8:30 open. We want to see price draw above this, break down, retest an array that's within premium and discount. So remember, that's our breakdown point here. We want to be sellers from up here, so we would need to take the top of this order block, which is uncanny how it just, if I zoom in, you can see how it just tags you in. Yeah, see that little wick above? And then you're going to be a seller below. All right. So look, I hope that has been a good session, guys. Thanks so much for your compliments. Let me just read back through the last couple of questions, just make sure that we've got everything covered. So yeah, FR33 will absolutely kill zones for crypto. The only difference that I put in place is that my AM session starts at 8:30 New York time, not 7 o'clock New York time, right? Which for the difference for me being GMT, which is UTC +1, is that's the difference between a midday start, 12 o'clock for Forex markets, and a 1:30 p.m. start for equities and crypto. Helping you frame your low time. Brilliant. Okay, I was surprised at how often you saw the run on previous sessions. It's so clear when you know what to look for. Yeah, absolutely. I think sometimes we got to stop overcomplicating things for each other. The markets are controlled by incredibly smart people. Even beyond that now, probably smarter algorithms that have kind of outsmarted people. The key thing is you want to be on the right side of institutional order flow. It means you want to be buying and selling with the big boys and the big girls, right? Once you can ascertain that, you can really, really start looking for how that's effective. It's no good just stepping onto a chart and blindly shorting previous sessions' highs and lows. Frame your bias, get back in there, and then look for those trigger mechanisms, all right? Okay, whack. Yeah, using the session indicators, that's fine as well. I know Asia's a bit of a tricky one. Maybe we'll do a deeper dive into Asia. I think sometimes, whack, by the way, when you're trying to trade, when you're not trying, but when you're trading Asia, yeah, look for. So you're trading this session here, for example, just wait for it to load. That's a really poor example because of that mass manipulation that we had. But let's look at today, right? So Asia is in here, yeah? So when you're looking to trade Asia, right, look at the prior day's highs and lows, but also the prior day's sessions, yeah? So you might find that one of the sessions that you're looking at here, right, if you come in and let's say, for example, you were looking at London session here, then when you come up and you run London session higher, or you run the high of day, low of day, then Asia can then give you some good trades. Just watch at how the previous day's kind of been put together. So watch at the previous day's order flow, price action, what's happened. If we had a really, really big move in New York, AM, PM, often then Asia looks to consolidate. And that's definitely something you can look for in there. Thanks for the great. You're very welcome, FR33 Will. Thanks for the great questions, mate, and very much welcome to the stream. Geo, you're very welcome, mate. Hans, awesome. Erica, awesome. Glad you got it out. All right, guys, I'm going to let you go before I rattle on anymore. Hour and 20 minutes today. Hopefully, there's some good alpha in there for you guys. Take a look at it. If this stuff does really interest you, do come and reach out. Yeah. And do me a favor, actually. Can you go and check something out, those of you that get the opportunity? In the description today, we've just launched our new link tree, which is for the Bird Nest, right? It gets you through to the free trial, gets you through to all the goodies, gets you through to our socials, everything like that. QBS has done some amazing work putting that all together. If you do get the chance to go on there, just to check it for you. I'm not saying you have to sign up for anything. If you are interested, you can come and join us for free. You can get our calls for free through our partner Bybit. Loads of amazing stuff coming up, where we've got free trading congress coming up soon as well, which we're going to be educating everybody for free and bringing on some of the biggest names in the industry. But if you could have a look at that for me and let me know if there are any technical issues, if you like the look of it, if you don't, ping me on Twitter, come and drag me at the nest if you're over there. All right, guys. But apart from that, thank you so much for joining me today. It's been a real pleasure. It always is. I'm going to be back Monday, Wednesday next week, and we're going to put in some serious work on the ground. I'm going to be live trading almost every day next week as well. So I will ping you guys out a link for that so you can come and join along in the New York AM session. All right. Have a fantastic week ahead, guys. Do remember about the news event today is kindly brought to us by Hans. It's been a real pleasure being here with you all. Have a fantastic week. Trade safe, trade smart, and focus on education. And I will see you legends next week.